This Week in Startups is brought to you by LinkedIn. You need LinkedIn Jobs to find the right people for your business. Post a job today at linkedin.com/twist and get $50 off your first job post. InVision. Get InVision for startups with unlimited users on the full suite of InVision tools, plus enterprise-level security and support at InVision.com/twist. That's INVISION.com/twist. And Silicon Valley Bank. Founding a startup isn't all hoodies and hoverboards. To make it, you need a bank that offers insights, expert advice, and custom solutions. Visit svb.com/next to move your bold ideas forward faster. Silicon Valley Bank. Ideas bank here.
Hey everybody, welcome to This Week in Startups. I'm your host, Jason Calacanis, and this is the podcast where we talk to founders of technology companies, investors, and pundits and authors about technology, business, entrepreneurship, and you've seen this year, 2019, we've had many unicorns on the program. Well, today we're going to have what I call a soonicorn. I predict soon this company will be a unicorn. The company is Ethos, and they are going after one of the most technologically resistant businesses, historically, insurance, specifically life insurance. And the founder's name is Peter Colis, and he is with me today. Welcome to the program, Peter.
Hi, Jason. Thanks for having me.
Yeah. You guys have raised 2 rounds of funding now, the Series A by our friends at Sequoia. You're a scout as well, I think.
I am.
You're part of the scout program. Have you made an investment yet?
I have.
Okay. How did it turn out?
Too early to tell.
Too early to tell?
But I've got a good feeling about it.
Okay, good. Well, you only have to beat my investment in Uber, DataStax, Thumbtack.
It's a tall order.
And Sam Altman's investment in Stripe to get yourself on the leaderboard. Can you say which one you invested in?
No, it's a secret now.
Oh, it's a secret right now. Yeah. Okay. Well, tell me about this company, Ethos. I know our mutual friend, Roelof Botha from Sequoia, I guess, is the investor in your company and the board member.
Yeah.
So tell me, what is the business? What do you do at Ethos?
Absolutely. It's a serious business. Roughly 5% of kids are going to lose a parent before they turn 15 years old. Which
5% before 15.
Which is heartbreaking.
Yeah.
And then of those families, 70%, if they lost the breadwinning parent, they would be bankrupt within 3 months. So life insurance is extremely important. And for something that's so important, it shouldn't be so difficult to get.
Right.
You kind of go through this 15-week process of medical exams and blood tests and paper applications and agents trying to upsell you investment feature policies that you don't need. And what Ethos does, it lets you buy life insurance while you're waiting in line at Starbucks. 5 minutes on your phone, you're done. 99% of the time, there's no medical exams, there's no blood tests, there's no commission sales agents. All we care about is protecting your family for an affordable price. Does
there have to be an insurance agent legally in the United States to sell life insurance?
Correct. So legally, Ethos has an agency, though we have no individual commission salespeople as part of the transaction.
So that's part of the innovation.
Correct.
Is that the incentives traditionally in insurance maybe are not aligned perfectly.
One of our core values is we treat our customers' families like we treat our own families.
Got it. So how does it work typically? Because when people say life insurance broker, or somebody selling life insurance, that's kind of, I think, just below used car salesman. People hate life insurance salesmen.
You think of Woody Allen skits.
Yeah. It's the worst, career or profession. Why is this out there?
They're not all bad. There are some nice people. Well, life insurance is a product that's traditionally sold, not bought, because it's so complex that it often requires somebody to push the product on a unsuspecting consumer who otherwise wouldn't go through this very difficult process to protect their family, even though the need is great. And so with Ethos, what we've done is just eliminate all of that friction and eliminate that misaligned incentive and really just think about what's best for that family. And if it's something that's been on your checklist for too long, can we help you get insured in 5 minutes or 10 minutes?
So you have to go find brokers who are willing to work without the traditional commission or the traditional incentives.
The majority of our customers never speak with anybody.
Wow.
They just purchase it online by themselves.
Oh, it's like ordering an Uber or getting an Airbnb or something.
Exactly.
Yeah. Is there resistance in the industry to this? Isn't this one of those situations where the incumbents would be very upset about what you're doing?
It depends on who you talk to. So in insurance, there's a problem that incumbents have called channel conflict, where they are so dependent on these agent sales channels that it's very difficult to build a direct-to-consumer business without offending the hand that feeds them. And so most are resistant. Some are interested in partnering with Ethos and innovating and bearing the risk that we issue these policies on. But it's a very slow-moving industry that's designed a culture around managing risk and protecting your balance sheet for 150 years, which isn't geared towards necessarily building a wonderful customer experience or innovating and building a direct-to-consumer business.
Because they're so busy, like architecting this 100-year balance sheet.
And dealing with 40-year-old legacy core technology and 35-hour work weeks and all sorts of implicit issues in a 150-year-old company. Now, these companies have established their market leadership literally over 150 years. There hasn't been a great carrier built in the last 100 years. And so we have an enormous opportunity, but also a big hill ahead of us.
Are you underwriting the policies, or do you just resell other people's, or you partner with the people who underwrite?
Yeah, it's a really good question. So Ethos does underwrite the policies. We adjudicate the risk and make the decision of can you be approved, and if so, at what price? Now, we do that without obtaining the financial risk ourselves, and your policy's guarantee is not reliant on Ethos's financial security. It's reliant on the financial security of a massive insurance partner behind us. We work with several today.
Got it. Like who?
For instance, Surety Life Insurance, Munich Re Insurance, RGA, big, storied, large companies that are highly regulated and very capital conservative.
And so they don't care where the insurance, they just want to get more people insured. Is there a motivation?
They want to protect more families as well, and to make sure that the risk is good risk and that it's priced appropriately. And so that's one of Ethos's innovation, is understanding how to underwrite people very quickly while making sure it's good risk.
How do you do that?
We pull all sorts of data about our consumers to really understand from a health perspective, what is their health profile, and then from a predictive analytics perspective, for someone who looks, acts, thinks, talks like you, how are you intending to live your life, and statistically, what is your mortality?
And is that something that insurance companies do already? What do you do that's different?
We leverage new data sources that insurance companies don't, but all of it is very highly regulated in what we can and cannot leverage. So all the data is Fair Credit Reporting Act compliant.
So is it like these people who are doing, I guess, a firm and some other companies are trying to build new credit scores? Are you going to try to build a new score by looking at my Instagram and seeing like, well, this person's like skydiving and doing all kinds of extreme sports, or this person's overweight because I have their health kit, or, I have their Fitbit, and they're not moving, they're sedentary.
Yeah. Really interesting question. We wouldn't use those things for underwriting because technically those would be discriminatory in the industry, which is actually a really interesting issue to talk about.
Wait a second. It's discriminatory that I am overweight or I skydive?
Well, ask yourself this. Let's say that the photo in your Instagram was taken a few months ago and you've lost weight.
Okay.
Would it be fair to use, for an insurance company that doesn't really know you well, to use that photo to price your mortality risk? Probably not. Maybe on average it would, but it would. There's a variance there, and some people would be treated unfairly.
Got it. So everybody has to be treated fairly. Would knowing my steps every day and my weight and my BMI, would that be legitimate?
That could be, yeah. And so there's all new sorts of interesting opportunities around leveraging health technology to give people better possible rates. Or even once you've been issued a policy, if you become healthier after it, lowering the cost as you go on.
And but you couldn't raise the cost, could you?
No, you can't. You've locked in that cost.
Got it.
With our product, at least.
So the name of the game is to get in great shape and then just eat Haagen-Dazs for a year, and then you're getting over on your life insurance company.
Exactly.
Right, let's take a quick break, and when we get back, we're going to see Ethos in action on This Week in Startups. Hiring is always hard, and it's getting really hard today because we've got unemployment at historic lows. Also, many people just throw a job posting out there. They put it on their job board or some random message board or dump it in your Slack room. That's not going to work. It's not going to work. But what is going to work is to go ahead and use LinkedIn. LinkedIn is where 610 million members visit, and they do that to make connections, learn, and grow as professionals. And sometimes they're looking to discover new job opportunities, or sometimes they're passive job seekers. And that is the secret. Not everybody is going to a job board every day looking for jobs, but LinkedIn will present opportunities to those hundreds of millions of LinkedIn users. And here's how easy it is. You just simply go to LinkedIn, and it's really easy because you say where you're looking for the person, you put in your job, you can then look for what experiences you want them to have. How many years of marketing, you set a budget, boom. It's up and running, and you will find somebody quickly. How do I know this? Because we found 2 of our 15 team members on LinkedIn very recently. Sir Charles, our new director, and our marketing manager, Maureen. You can create these job listings quickly and easily, and I'm going to give you $50 right now. That's right, $50 right now for your first job posting. I want you to go to linkedin.com/twist. Go to linkedin.com/twist, and you will get $50 off your first job posting. Terms and conditions, of course, apply. Let's get back to this amazing episode. Hey, everybody. Welcome back to This Week in Startups. I'm your host, Jason Calacanis, and Peter Colis is with us today. He is the co-founder and CEO of Ethos, Ethos. You have ethos.com, ethos.co. What do you got?
Ethoslife.com, getethos.com, Ethos Life Insurance.
Ethos Life Insurance. Okay. Let's take a look at it. You said it was easy as 1, 2, 3. You could do it online and coffee. Let's see if you can do it during a podcast. Here you are. You got your Verizon. You're signing in. You're at getethos.com.
Check it out.
Ethos. Yeah.
My mail.
You're a male, yes. Do you currently use nicotine products? No. Health is great. Excellent. Okay. California we live in. Put our birth date in here. 5/22/1987. So you're a millennial.
Boom.
And here we go. Ethos
got
plans.
my price.
$29 a month. Get you...
Let's take it.
Okay. $438. We promise to make this process as quick and easy as possible. To do this, we need you to make sure your application is accurate and complete. It's pretty important. It helps you get the coverage at a great price. Any mistake can slow things down.
And so one of the cool things is people are actually more honest in our applications than in a traditional agent's application. So we've done a pretty good job of, and the process goes on for 5 minutes of answering questions. But there's a behavioral science competency in our business of figuring out how to help people speak accurately and tell the truth.
So by priming them with the honesty pledge that they're taking it, you've primed them that they should be honest.
Put them in the mindset.
Put them in the mindset to be honest. It's a pledge.
Correct.
And they're taking a pledge.
Behavioral economics.
Is it really behavioral economics?
Yeah.
What's the driver behind that? You've made a social contract with them or something?
I think it starts in the way that you present yourself. It starts from the very first time they see an ad or they come to Ethos, they hear about it from their friend. Our largest source of consumers is our current customers. They tell their friends and family about Ethos. And so they come here knowing that it's a good place that cares about their well-being, that wants to help them protect their family for an affordable price. And what we found is the data has shown people are more honest in our applications than in an agent's application where they're commissioned to sell you and potentially helping you fill out that policy, or maybe you're uncomfortable in front of the stranger in the room.
Got it. So there could be some steering of the witness.
Potentially,
that may have happened.
It's very common in life insurance.
Really? So the person who's asking, hey, if you use less nicotine, you probably would get a better price. And
so you think about our business, what you do today can have impacts for 20, 30 years in the business. And so we are very careful and long-term oriented when we think about how we conduct ourselves. So it's an interesting business.
Thus the term life insurance salesman coming up again. So what happens after you fill out this form?
Yeah. While you're filling out the form, we're analyzing you a lot of information about you. And we will either make a decision there on the spot and say, hey, Jason, you're approved. Congratulations. You want to click this button, we'll give you a policy right now. Or we'll do it within a couple days, depending on if we need to verify some information. But either way, it's an NPS of over 85.
Wow, it's incredible.
So think about that. It's a life insurance company that people love, and so much that they'll refer their friends into it. And so we've always thought, if we bring such a great product, we solve that problem of having to hard sell people and making sure that it's a product that's sold instead of bought.
I just realized there's a new category of startups I will call embarrassing questionnaires. They're startups based on embarrassing questionnaires or uncomfortable questionnaires.
Yeah.
like Get Roman and Hims, and we have a company, Wisp, that we've invested in that does products for feminine health issues that would be embarrassing, or men's issues that are embarrassing to talk to a doctor about. But if you're talking to your iPhone and you're just answering a survey, it's like, how often do you have erectile dysfunction? It's like, every day. Great, you get 30 pills of Viagra, or whatever. Like, it's easier for people to answer these questions of, hey, do you...
Totally. And you think about the traditional process, there's a paramed who comes to your house and medically strip searches you, effectively taking your blood, going through this kind of extensive interview process. They'll financially strip search you in some kind of fashion. And so it's a totally different ease of use.
I don't know anything about this industry, and I had life insurance for a long time. Then I made money, and I was like, well, I guess the amount of life insurance I
You're
had...
self-insured now.
Which means I'm self-insured,
Right.
Is that a common thing in the industry or no?
No, you're just rich.
Oh, okay. So, no, but even amongst people who are affluent, who have money in the bank...
Yeah. Life insurance is still a really good concept. And so you think about what we sell, term life insurance, it's really meant to protect against the untimely death of somebody.
Okay.
To, in the next 20 or 30 years, if something happened to you, would your dependents be okay?
Yes.
And for the vast, vast majority of American families, the answer is no.
But if the answer is yes, then
then you potentially don't need it, and you may consider one of those fancy investment products that's meant to mitigate taxes.
How does borrowing against your life insurance policy work? Because that's the stuff, this financial stuff that's been added to it that I think made it super confusing.
Yeah.
There's life insurance. If I die, you give my partner X amount of money. Yeah. What do they call that person? The
beneficiary.
The beneficiary. You give the beneficiary this money. That's just a straight transaction, right? I pay $5,000 a month, or
that's term life insurance.
That's term life insurance.
Yeah. Which is right for 97% of families. Roughly.
Is that what you guys sell?
Yep.
So term life insurance means over some term, I pay in $5,000 a month. Mm-hmm. And if I die before the age of 30 years, next 30 years.
Yep.
So if I die before 70, if I'm 48, if I die before 78, we get the $1 million.
Correct.
And that would cost how much?
It totally depends on your age, your gender, your health.
Let's say a 48-year-old guy in Silicon Valley who's in okay shape.
Let's say $50 a month.
$50 a month.
Something really reasonable. The average American thinks life insurance is 3 times as expensive as it actually is, which is one of these problems of perception that Ethos can help ratify by giving you a price so quickly.
And the reason is most people don't die?
The reason is,
young.
As to why it's so cheap?
Yeah.
It's a question of statistics.
Yeah.
So 45-year-old, 1 in 700 will pass away each year, roughly. And so there's a mortality expectation to that.
1 in 700 will die each year.
Roughly. If you have a book of 45-year-olds. Yeah.
Got it. That's fascinating.
Yeah.
So you have 700 to 1 odds of dying.
Each year.
So over the next 5 years, you would have a 5 in 700 chance.
Correct. Well, a little bit different than that.
A little bit different because...
Roughly.
Every year that went by, your chances of dying in the next year would go down or up?
Up.
It would go up because you're getting closer to your natural death.
Correct.
And you've driven more miles and breathed more air and...
Yeah. So it's interesting.
Experienced more life. I'm thinking about it like a gambler and how many cards are left in the deck.
How you drive is an enormous predictor, not only of your likelihood of dying from an accident, but also from your likelihood of dying from a critical illness.
Huh.
Like cancer.
Interesting. And I guess the correlation there would be risk takers at speed would be risk takers in other aspects of life.
It is.
And conservative people wouldn't eat that extra donut.
On average, it's a proxy for how you live your life. Exactly. Wow. And there are all sorts of fascinating things like this that you can incorporate. But to kind of go back to it, life insurance is the right solution for the vast, vast majority of families. Mm-hmm. And it's quite underpenetrated. The younger you go, the more underpenetrated it is. And that's an issue because the younger you are, the less savings you have, and the more vulnerable your family is. And so oftentimes we see people wait till they already have a kid for a while or they're on their second kid, et cetera. And if we could make one change, it would be to help families get protected earlier.
And how often do these actually, in the case of a death, you hear this, I guess there's this undercurrent because of the what are you, a life insurance salesman, kind of negativity about this sector, there's this, they're never going to pay you.
Yeah.
How often does a person not get paid on a life insurance policy?
Thankfully, life insurance claims are very highly regulated, which is different from auto insurance claims, for instance.
Right.
With life insurance, basically, if you died, it gets paid unless if you passed away within 2 years of taking out the policy, they'll look to see, was there a real material lie? Did you forget to mention that you have stage 4 cancer or something like that? And that's when it can be contested. But if you legitimately pass away, it's black and white as far as the company needs to pay you.
And if somebody did have cancer and then like 5 years went by,
it would be paid.
Really?
Yeah.
Wow. And so does that mean there is a certain amount of fraud in the industry?
Sure.
That's absorbed?
Yeah.
With people doing this exact thing?
And when you think about life insurance, so it's interesting. You brought up Ruloff before. They figured this out at PayPal, and a lot of consumer companies have figured this out with fraud. You can put a brick wall in front of your store, and you'll eliminate shrinkage, but you're also going to stop sales, all sales.
Yeah.
And so with insurance, just like that, it's about having a healthy balance of good risk and fraudulent risk.
Right.
And you can't eliminate all the fraud, but as long as you price it properly for that distribution of good risk and bad risk, then that's really what you want to achieve.
We're living longer.
We are. Not last year. The opioid crisis on average, unfortunately.
The opioid that's fascinating, isn't it?
First year in, I don't know.
If somebody ODs, is that typically in a term life insurance carved out, or is it paid?
No, that's paid.
It's paid.
Yeah.
Fascinating. So when we get back from this quick break, as people have lived longer, generally speaking, over the last 30 years, with the exception of fentanyl and opioids and the insanity around that horrible plague in our society today, one of the things that's becoming a leading cause, sadly, of death in the United States is suicide, especially amongst young people. I want to understand how insurance companies are dealing with the increasing rate of suicide in America when we get back on This Week in Startups. You know Envision as the product design platform used by thousands of startups and by 100% of the Fortune 100. Well, now they have a new offering with startups in mind, and it's called, wait for it, Envision for Startups. And this will help you streamline your workflow from design all the way to development, and it will make your startup life so much more manageable. Envision for Startups gives you the full suite of Envision tools, all packaged with startups in mind. You're going to get unlimited accounts for your entire team to collaborate so everybody has a voice, as well as enterprise security and customer support. You can get Envision for Startups at envision.com/twist. That's INVISION.com/twist. Streamline your workflow with unlimited users and get the full suite of Envision tools, including the very cool freehand collaboration tool, which is just amazing. And it's just one of their many tools. You'll see it when you go to the site. And you will get that enterprise level security and support. Thanks again to Envision for supporting This Week in Startups. All right. We're talking about the amazing industry of life insurance, and we've made it interesting. My guest today is Peter Colis. He is the CEO and co-founder of Ethos, a unicorn in my estimation. They've raised 2 rounds of funding. I guess Sequoia and Google Ventures did the Series B, $35 million. And you did an $11.5 million Series A back in the day. With Sequoia, you've raised $50 million or so. Congratulations.
Thank you.
Got Robert Downey Jr. in there, Iron Man.
He's awesome. We love him.
No spoilers.
He's helped try to close his candidates, which is really nice. That's his biggest contribution.
Close?
Talent candidates to join our company.
Oh, talent candidates.
Yeah. That's our secret. If you're a very competitive engineer, we'll send stuff from Robert Downey Jr. to you to get you to join Ethos.
Really? he'll literally send you an Iron Man gauntlet, autographed gauntlet. I like
that's what we try for.
Exactly. And Will Smith and Kevin Durant.
Yeah.
So you did the trifecta of celebrities. Does that come in a package or something, or how do you wind up getting these celebrity investors?
No. What
you sought
they
them
all
out?
have in common is they're all family men of some kind, and so they all resonated with the problem that we were trying to solve and the solution that we could bring.
Got it.
And then the thing I would say is we have no illusions that building a brand in life insurance is a difficult endeavor.
Yeah.
And so if we could align ourselves with people who really understand how to build brands, it might be helpful to us.
Yeah. How do you get those type of investors? I guess a lot of people are interested in the celebrity
We start a
turned VCs.
sexy business, like a life insurance
Exactly.
company.
They
and
just knock the door down.
Yeah,
They're
exactly.
like, wow, another dating
Exactly.
app? I'm in. Oh, wait, no, sorry. I got a life insurance app that's going to take priority over this deal.
That's a sure way to do it.
No, but how do you wind up? Did you seek them out? Because I've never seen somebody have all three of them. I've seen them like selectively, but how do they make decisions? They have partners they work with, I take it? Rich Kleiman with Kevin or...
I think I do know Rich. They all kind of have their own unique situation. Some of them want to be more actively involved, others don't. But I think they all thought, one, it was a good business opportunity, but two, it aligned with their mission and what they wanted, to achieve in with a higher purpose with their money.
Got it. Interesting. When you get those type of investors, can you lean on them for a tweet, or is that considered gauche, or you just have to if they do it, that's great?
If we were selling tweets through if we were selling life insurance through tweets from Jay-Z, I would be concerned that we
Wait, you have Jay-Z as well? Oh, you do have the Rock Nation fund.
Strategy.
Yeah. Well, maybe he could just put an Ethos hat on and get, coming to the Warriors game with an Ethos hat on. We'll be fine.
That wouldn't be very cool. I think Ethos is almost as cool as Rock Nation. One day we'll be there.
Yeah. Hey, suicide, serious topic, right? It is staggering how this has become now the leading cause of death amongst, I think, a certain section of young men, which is really weird. But I mean, we're not dying in wars as much as we used to, and people are, surviving car accidents and not drinking and driving as much. And there's Ubers and Lyfts that take people places if they do have too much to drink. How does the insurance industry contend with this?
Yeah.
And how do they look at it? Like if somebody takes out an insurance policy and kills themselves the next year, they do an investigation, they find out what?
It's very sad.
Yeah.
It's a very difficult topic. The one carve out, as you mentioned, that's in almost all life insurance policies is a suicide exemption clause, meaning that if you take your own life, the policy is invalid, which is, it's sad, and that's just kind of the way the industry is formed. What's really interesting is the life insurance industry is one of the few that has an incentive to keep you as healthy and long-living as possible. Most of healthcare is incentivized or makes money when you're sick, and life insurance is just the opposite. And so you think about the future innovation in the industry, how they can utilize these premiums they've collected to either better educate you in health, pay for your health care potentially. Your policy could end up becoming a source of funds for keeping you alive.
Fascinating. And so a person who has do they ask mental health issues on your questionnaire, or do people, because mental health is becoming a very acute issue in the United States, and that obviously is a precursor to suicide in some cases. So
also it's correlated with other ways of people passing away earlier in life.
Really? So maybe
suicide.
There could be some reckless behavior or
lots of stress or just general unhappiness has been linked to a shorter life. So it's a sad topic. But I think life insurance companies are in a prime position to innovate in this way. You think about if we were to do a partnership, let's say with some sort of healthcare organization or even a genetics company that has a constant pulse on you as a human, right? What would we be able to do? What would we be able to fund? Because it's in our incentive to keep you as healthy for as long as possible.
And what would that be? How would you execute on that?
We've looked at partnering with all sorts of healthcare organizations, to be honest, to provide supplementary benefits to our policyholders. Once you become an Ethos policyholder, what else can we offer you, basically?
What are the other types of insurance that make this so convoluted? Because I know that when I met with somebody, I was like, all right, I want to pay a certain amount a month and I just want to get my wife taken care of if that happens. And they're like, oh yeah, but you can pay in and they get that money back. And I was like, okay, what's that? And
there are all types. There's permanent life insurance, which is right for very wealthy people who want to avoid taxes in wealth transfers to their children and have maxed out all their 401k and Roth IRAs. There's annuities.
How does that work?
Basically, if you haven't maxed out your 401k and Roth IRAs, those are the most efficient way to save. And then once you've maxed those out, you can consider permanent life insurance, which will provide a tax-free vehicle that pays to your children, sometimes with a guaranteed rate of return. Now, the thing to look at is there are all sorts of fees that the life insurance company takes from this process. And that's where it becomes very difficult for the average person to evaluate these policies credibly. And you should really try to have a non-commissioned financial advisor give you some advice on it before you purchase a complex policy.
What are the other policies?
There's whole life, universal life insurance. There's critical illness. There's disability. There's annuities. There's 31 flavors that an insurance company will try to sell you.
Really? I knew somebody with the disability one, a friend of mine, who's an angel investor now, and he got hit by a drunk driver, and he was an attorney, and he couldn't practice anymore. And this happened at a relatively young age. Yeah. And now he is, if he hadn't had that, and he bought it on his own. Yeah. Just as a 30-year-old, or just had the presence of mind to have disability insurance.
It's very popular with attorneys, doctors, architects, kind of one-person, white-collar professions.
Why?
We think about it, if you're a doctor and you can't practice anymore because you're disabled and you have a very specialized skill set, it's tough. And one of the other things that is really interesting is how do you get disability to mass market 1099 workforce? Because it's just as important for an Uber driver as it is a doctor.
Yeah. What does disability cost and how do they price that? And do you offer that or not yet?
We don't yet. We've always thought it's important to focus on one product and do it really well at first. Disability, it really depends on your profession. So if you're a coal miner, it's going to be priced differently than if you're a doctor. But any 1099 worker who's out in the field working, they should consider the product.
Yeah. That's interesting. I wonder if there's a new product that could be created for 1099 workers that would just deal with fluctuations in pay or, seasonality.
There's a cool seed stage startup backed by Sequoia called Trupo, which is tackling this very problem.
I think that was the one that was smoothing out earnings, right? Your earnings come to them and they can then pay you advances against it or something?
Yeah, I'm not sure of the details, but it's something to do with disability for 1099s.
Yeah. It's fascinating. So you sell the term life insurance now.
Correct.
And that's it? That's the only policy?
That's it.
And do women take it out as well, or?
Yeah, we have a fairly even gender ratio.
It is even gender ratio.
Yeah, and you think about it, it's equally important for how many women are the primary breadwinners in their family now.
Because it used to be something that was targeted towards men when that was the primary workforce.
By male sales agents who are more comfortable with men,
It seems like a huge opportunity because if it's a bunch of like smarmy male life insurance agents.
Yeah, looking for old rich men to buy their policies.
Yeah. Yeah, they're not interested in this younger generation. They're not probably as interested.
Ethos has the opportunity to democratize the product and bring financial security to families that otherwise wouldn't get insured. One of the coolest things about our product is the majority of our customers are not looking for life insurance. They're good candidates for it, and they otherwise may not have purchased life insurance. And we go to them and we say, hey, here's life insurance, here's the concept, here's Ethos. You can sign up so quickly, and then they do.
I'm curious. It seems like this is something that would work really well on an enterprise sales basis. When we get back from this quick and final break, I want to know if there's an enterprise play here, because it might be a nice benefit for me to just give to everybody in our company when we get back on This Week in Startups. If you work in Silicon Valley and you work in technology, it's not all about ping pong tables and free food and the hoodies. Those are all fun, sure. But there are a lot of challenges throughout the startup journey, and no one understands them quite like our friends at Silicon Valley Bank, where I do my banking personally. Have a great idea for a startup, and I do it professionally actually as well. If you have a great idea for a startup and you don't know the right way to launch it, well, Silicon Valley Bank has helped thousands of startups and is always eager to share their insights. Feel like your company's growing at quantum speed? Well, Silicon Valley Bank strives to support you at your pace, quick, nimble, and always looking ahead. With Silicon Valley Bank, you're not just getting a bank, you're getting a banking and financial services partner, along with the insights and experience and scalable solutions that founders need to move their bold ideas forward faster. I know this because I work with Silicon Valley Bank, and I have for over a decade. And when I email them, man, do I get a quick response. So here's your call to action. If you're a founder, a potential founder, or just someone with an idea and a whole lot of ambition, Silicon Valley Bank has solutions that will help support you from the seed stage to the big stage. So visit svb.com/next to learn more. Silicon Valley Bank. Ideas bank here. Hey, do single people get life insurance ever and like give it to their siblings or something like that? That's not a market.
It's a smaller market.
Yeah.
Usually it's your spouse, your children, maybe elderly parents.
Got it.
Those are the primary use cases of
Is
term
there an
life.
age it's too old to get it? Like, do 70-year-olds have the ability to get life insurance, or is it just like, you're going to die?
We'll insure up to 70-year-olds.
Got it.
And then past that, the pricing for it changes a lot because it's more of a assurance that you're going to pass during the term than a insurance against passing during the term.
Ah, right.
Yeah.
It's we're in the window here. Yeah. That's fascinating. Hey, what about the enterprise sale? It seems to me like if it's so affordable, it could be something very simple to give to employees. I know I've always had it because I was a key man at my companies. And so when getting key man life insurance for a company, we'd always have $1 million or $2 million. If I died, the company would get $1 million or $2 million to ride it out. And then as part of that, they would give the $1 million or $2 million to my spouse or my family. I remember having to do all the tests and stuff when I was younger.
Yeah. So group life insurance, which is sold through employers, is a bare minimum, and it has a couple flaws to it. One is it comes in very small sizes. Two is it's not portable. So if you leave your company, you can't take it with you. And so the average person works for, I think, 2 years at each job now?
Yeah.
And
like
as you get older, life insurance becomes more expensive. And so that group should be supplemented with individual life insurance. Now, you are right in that it's an attractive market. And so Ethos is also considering an employer product, which would have a innovation that basically tries to solve those issues that I just mentioned.
Yeah, we're investors in Wealthfront, which I think has a good approach to educating companies, and then the individuals can then join, but the company's just facilitating sort of education. And I think just educating people and getting them on board is the key here.
And I think the key is to be a trustworthy company that has a incredible customer experience so that employers can feel really good about recommending you to their employees, which are, as an employer, that's your most important client is your team members oftentimes, right? Can you take loans against these insurance policies or? Very few of them. Usually there's certain types of permanent life insurance that you can borrow against. And again, life insurance companies like to charge fees for that.
So that's where they get you is on the fees.
Correct.
During the crypto phase, everybody was going to reimagine insurance with cryptocurrency and put it on an immutable blockchain. Which, to me, putting it on an immutable blockchain as opposed to a backed up database that's, in a couple different data centers doesn't seem very radically different to me. Is there some crypto play in insurance that makes sense? Have you thought about that when the crypto craze was going on? Were people in your company telling you we got to have a crypto strategy?
We never considered ICOing. Insurance is a contract-based business. It's unclear what value the blockchain technology adds to that, especially when each ticket size is meaningful. And it's not a repeated transaction.
Okay.
As well as it's very clear who owns what. It's very clear who's part of what side of the contract. If blockchain ever did become a really important part of the business, we would always reconsider it.
The smart contract makes sense, right? Like if you die, you get paid, but then you have all these investigations and other things that occur. So you wouldn't want the smart contract to be hacked. That's the problem with smart contracts. They seem really smart, but judges exist for a reason because sometimes a contract needs to be interpreted.
And anonymity is not an option when it comes to insurance. You really need to understand who both parties are. And so it's unclear what value that would add.
How do the insurance companies look at very risky people, motorcycles, drugs, rock and roll, paragliders, because that was in that movie, Along Came Polly, the guy was an insurance salesman, I think, or he made actuary tables.
Got it.
He was the person. You never seen Along Came Polly?
No, I didn't.
Oh my Lord. This is like one of the most hysterical films, and it's about a guy who does actuary tables.
I got to look at it.
And they're insuring a maniac Richard Branson-like CEO who likes to base jump and do other crazy things. And then Ben Stiller plays the person who's trying to explain exactly how insane insuring a Richard Branson type person is.
Do we feel like you're the Richard Branson and I'm the Ben Stiller here?
No, in this case, I would be the Philip Seymour Hoffman, who was his fat friend who was just thought he was good at basketball. There's an amazing scene with Philip Seymour Hoffman saying rain dance, and I'll just leave it at that. 26% on Rotten Tomatoes. Rotten Tomatoes is garbage. Garbage website. Along Came Polly is one of the classics of comedy classics. But seriously, how does, you got some crazy, maniacal, these like Silicon Valley kids and they're going to Burning Man and doing drugs and then they're paragliding or doing this other stuff. Can those people even get insured or people who ride motorcycles? How does it work? Because you didn't go through all those questions. You said there's 5 minutes of questions. I would assume motorcycle, scuba diving. Yeah. Because when I took it, I was a scuba diver. And we had a big thing about I've been scuba diving 6 times. Yeah. I've done like 20 dives and I go once every 2 years. Like, am I at risk or not?
So scuba diving, it might be a minimal price change because how many of your friends died from scuba diving? Not a lot.
No.
Motorcycles, maybe a bit more, but also people who ride motorcycles are somewhat subsidized by people who don't ride motorcycles. And so it's about a blended portfolio. If you take ecstasy at Burning Man frequently, you're probably not insurable.
Really?
Yeah, like lots of...
Well, there goes half the listeners.
Oh, man.
Sorry to the listeners of This Week in Startups at Burning Man right now, rolling on Molly. So people lie on those parts of the tests then?
Well, that's the trick is to... It's to help them understand why it's beneficial to tell the truth, number one, and then create an environment where they feel safe. Yeah. And then number two, to have a really blended risk portfolio.
Got it.
Where you have both good and bad.
Wow. What about cannabis? That's become like a huge thing now. So they've had to rethink that, right? Because it's legal.
I think most life insurance companies probably treat it in a more old school fashion of denying insurability or severely jacking up the price. The way that... the more modern way to think about it is if you smoke it frequently, it will probably cause similar conditions, or it might cause similar conditions to if you smoke cigarettes frequently.
Sure, yeah.
And so that's one way to think about it. And then if you use it medicinally, that's a different
right.
That's a different consideration. But
And what about the region? I know it asked what state. Is there a correlation between what state you live in? Because I know that when Malcolm Gladwell did one of his books, and I don't remember which one it was in, but he was finding some of the people who lived the longest, and like if it was some island off of Japan, I think, or a town in Japan, people lived on average into their late 90s.
Yeah. We don't distinguish price by state. It would be discriminatory.
It would?
Yeah.
What about by country? Would that be discriminatory?
Well, laws are set on a state-by-state and U.S. basis.
Got it. Okay.
So not on and Ethos is only in the U.S. today. But what is interesting is, states, for instance, 49 states allow you to price differently by gender because different genders have different life expectancies. Sure. But Montana, for instance, requires that you keep both genders priced the same. For anti-discriminatory intentions, I actually think it's kind of hurting women because
women live longer and they don't die of the stress-related diseases that men do.
Subsidizing the male's price, but it's a small state.
And then people are now picking their gender, so that would make it even more complicated if somebody just decided, well, I'm non-binary, I don't want to answer that question, you're discriminating against me now, or I've switched genders, and I've picked a different gender. Now, how are you going to even address that issue?
Well, I think that we think about it from how do you designate yourself and how do you identify yourself today?
Oh, is that right?
Yeah.
That's interesting. Yeah, it's
a more modern view on the...
Yeah, they're having a real issue in the Olympics now and in competitive sports because they're looking at it by the amount of testosterone in a body. and there was somebody who was born biologically a male, then identified as a female, and then just were winning everything. And they said, well, but your testosterone is above this. So you can take testosterone inhibitors to get below this threshold to compete in this specific sport. I'm not sure which one it was in which competition. Or you have to be...
Yeah.
So I think eventually it'll be assigned by testosterone level, not by what gender you select yourself as, if you are, in fact, selecting yourself other than your birth gender.
It's a tough problem to solve.
All right, let's recap. You're selling insurance, but in Montana, they don't pick by gender. That's fascinating. I wonder what the history of that is.
Yeah. I'm not sure.
I'm not sure either. Interesting. If you do drugs, you're not going to get insurance, or it's going to be difficult.
Well, it's best
Don't do drugs,
kids
kids.
not to do drugs in
Don't
general.
do drugs, kids. Still exists as a general framework.
Yeah.
And suicide not covered, obviously, because there would be an incentive to buy insurance if you had financial issues.
All the dark topics. Just remember that life insurance is a wonderful product for most families in America to protect their
and it's
their
so
loved ones.
cheap, $20-$30 a month. You have
It's
no
very
excuse. $500 a year or less.
Yep.
Under $1,000.
Yep.
Certainly. If you're under 40, it's under $1,000 a year. You can get into something under $500 a year.
Yeah, of course.
It's like it's less than the price of a phone bill.
Now, also remember, pay your phone bill, enjoy your latte at Starbucks.
Yes.
But also think about your family.
Yeah, you should definitely have life insurance.
Yeah.
100. Okay. We'll see you. Thanks for coming on the program. We'll see you all next time. Bye-bye.